Howdy, Jacob here. Today we're looking at Phibro Animal Health Corporation, ticker symbol PAHC. We see that they are a pretty small company, 430 million market cap on 798 million enterprise value in the pharmaceuticals industry. They operate as an animal health and mineral nutrition company in the U.S., Israel, Brazil, Ireland, and internationally. Their revenue has been pretty slow growth, but only 1 year decline. It looks like it was 2020 in the last 10 years, so that's pretty cool. Operating margins and gross margins are relatively flat. Operating margins actually down a bit, but gross margins up a little bit. They've paid out a dividend that's been very consistent, about 40 cents, hovering around there since 2015. Return on invested capital was in the double digits between 2015 and 2019, but is now averaging more recently mid to upper single digits. They currently have a 4.4% dividend yield. Pretty small company. Let's look at insider ownership. Okay, very little, at least from Yahoo Finance. There was a little bit of debt here. Let's see, 453 million long-term debt, 22 million short-term debt, and about 81 million in their cash-like products. So there's a good amount of debt here, about 400 net interest-bearing debt when you look at that. And then their free cash flow dividend pays out 19 million in aggregate, and they haven't been able to afford that since 2021, where it was exactly 19 million in free cash flow. So, I mean, on a free cash flow side, when they were killing it between 2015 and 2018, yeah, it's great and everything. But then recently, it doesn't really it looks like their capital expenditures are catching up with them and they're not able to achieve cash from operations in excess of it. Okay. Well, let's start making some assumptions here. I would say that for growth, they have been growing pretty consistently. I think that that's a reasonable assumption to say that they can find a little bit of growth going in the future, and then we'll still have some at the end of the 7-year period that we're evaluating. I dislike that net income's higher than margins, than their free cash flow margin, but I'll still use a relative average to get to that final figure, maybe 4.5 and then 3. And then share change relatively flat. Their dividend, they can't afford it. Maybe if they cut it 66%, they'll be able to afford it. I mean, okay, so if you understand this business better than I do, then this could be something for you. I mean, 4% dividend, a little over 4% on the dividend yield. And if they can get back to these 2015 to 2019 numbers, I mean, that average is probably 30 to 40 million, and that'd be a 10 times free cash flow market cap. I mean, even then, it doesn't sound like a screaming deal to me. So it's just an interesting company, fairly short video. Hopefully, everyone enjoyed it as it goes today. Thank you.